Hello guys, this is us again. Welcome back. So anywhere you find this video, if it's on YouTube, kindly subscribe to the YouTube channel and turn on post notification. And if it's on TikTok, kindly give a follow. So today we'll be talking about Algo market structure, a trending topic in the forex market. Like everyone wants to just know this. Why? Anyways, today I will just break it down for you all. It's very simple, not that hard. Okay, I will try my possible best to break it down for you all for your understanding. So let's start without wasting much time. I love starting with the basic market structure. So as you all know, this is the normal basic market structure that everyone treats. Now I will tell you why it's not actually good to trade this pattern. To me, to others, it might be good and people are making money with it, that's fine. But to me, I don't trade it and I'll tell you the reason why. So let's say for example, we have a break of structure here, right? And secondly, we have another break of structure. Now, most retail traders they want to buy from this other block, right? And also some want to buy here. Now, people buying at this other block, what are they actually doing? They're actually telling us that the concept of liquidity and inducement doesn't exist. Because if you're expecting the market to just come back to this your other block and boom, buy, that simply means you don't use the concept of liquidity or inducement. And market made us to understand that it seeks for liquidity and inducement. You get it? It seeks for external liquidity and internal liquidity. As we all know, this high here is an external liquidity and can also be called a transactional liquidity. And this low here is also an external liquidity. Does that mean that the market will not take out this external liquidity just because the retail traders are buying? Are you getting it now? So that simply means to me, this is not actually high trade, but to the retail traders, some of them make profit with it. Not that some of them, like most of them, make profit with it, and it's fine. Like I said, what I trade is not this basic market structure. I trade the Algo market structure, and I will show you guys how I trade it. But if you trade the basic market structure, I'm not talking down on your strategy, it's fine. You can trade it. The truth is, all of us we do hit SL in the forex market. Whether I'm trading the Algo market structure or the basic market structure, I will still hit SL. So the difference between we and newbies or people that don't know how to trade is risk management. If you don't know how to manage your risk, you are going nowhere. So that's just it, guys. So without wasting much time, let's dive into Algo market structure. And before that, let me tell you guys why this is not valid to me. Now let's assume that um, you want to go and buy something in a shop. When you get to that shop, you tell the buyer, sorry, you tell the seller, you'll be like, I want to buy this thing, right? And the person there will sell it to you, which simply means you are buying and they are selling to you. So for marketing to take place, for trading to take place, rather, there must be buying and selling. So if you are buying from a zone that hasn't sold yet, when I say sell, it means market will come down to this zone and take this thing out. That means I've sold to these people before buying. So if you are buying from this zone without this zone taking out any low, that simply means you are not selling first before you buy. Are you getting it? So to me, that is not right in my strategy. Okay. So that's it, guys. So how should we trade it instead? You see, since every low or high are liquidities, simply take your trade below or above any zone or your POI. For example, now this is a low here. So is it advisable to take a trade here? No. Take a trade below that low. Do you know why? You know that market seeks for liquidity. So market will come back and take this low here as liquidity before tapping into your zone, which is this main zone here. Let me show you. Which is this main zone here. This one. So assuming there is no liquidity here, market would have sniped this your zone as liquidity and tapped into this other one here before moving back up. That is just it. Very easy. That's just the concept of liquidity and algo market structure. So buy below or above, sell or buy below or above highs and lows. Okay. Don't take a trade from another block without an inducement or liquidity. I believe that is clear. And in the algo market structure, we have two types. Now I will draw the first one for you guys. We have the type A and the type B. So let's start from the type A. So the type A is more of an SBI, structure break and inducement, as you all know. So look at it here. Um, so look at it here. So firstly, let's say we have a liquidity sweep. Then after that, market will give us a break of structure. Then give us an inducement close to our POI. Then that inducement that the market give us, we break a structure for the second time. This simply means in the type A, we have how many break of structures? Two break of structures. Before market will tap into your main POI and boom, hits your TP. I believe this is very, very clear, guys. And I believe most of you are familiar with this. So this is it. You mark your order block like this. And this is the inducement that the market will take out. Can you see it now? Very, very easy. Even though it's only this model you have to be focusing on yourself, it's fine. You don't need to scatter your brain with so many concepts. Focus on few things. Get it. And practice it always because practice makes improvement. You get it? So that is it. I will show you an example of this on the chart, but before that, let me draw the second model. So the second model is the type B. Remember, this first one is the type A, while the second one is the type B. In this type B, we don't really need two break of structures. After a liquidity sweep, we just need only one break of structure, then an engineered liquidity. This inducement here, or this liquidity that will be formed here, will not break any structure. It will just straight close to the high there and mitigates you before moving up. So the difference between these two is that this one, type A, will give you two break of structures to the upside. Same thing if you are trading downtrend, get it, to give you two break of structures. While the type B will just give you only one break of structure with an engineered liquidity. This is the engineered liquidity here. Then your other block. So these two models works perfectly well. If you can master the two, master them. If you can just master only one, you can still master it too. You get it? Very, very easy, guys. Remember, every high or low is a liquidity or an inducement. That's why we always wait for something like this, which is a low to form close to our POI before we can take it, because every low is what a liquidity or an inducement. Okay, same thing here. This is a low resting close to our what POI, making this zone valid. Assuming there is no liquidity here or inducement, we wouldn't have taken this trade, or we will not take this trade. You get it? So that is it, guys. So let me move to the chart now and show you guys an example of the type A and type B. So this first one here, without even explaining it, you already gotten it that this is a type B model. So what can you see here? Let me cancel this thing. So the first thing you can see here is um, a liquidity sweep. Or the first thing you can see here is the trend. Let's check the trend. We want to 2 hour. So you can use any higher time frame to check your trend. If you are using the daily, fine. If you are using the 1 hour, fine. And if you're also using the 30 minutes, fine. So checking from the 2 hour, you can see that this market is bullish, right? Using your trend line, you see that this market is really, really bullish. Easy. So since you have seen that the market is bullish, you simply will start looking for your POI, your valid POIs, which are your models, right? And the first thing you can see, let's assume that the market is around this place now, around this place. Since we can't see it clearly, we can't see the other block clearly, we can't see the inducement clearly, you now move down towards a more lower time frame. You get it? You move down to a lower time frame to see the other block and the rest things clearly. So moving down to 1 hour, we can see that we have a very nice other block here. Can you see it? And before that other block formed, we had a break of structure. So this is the type B, just one break of structure. This is the second high. Sorry about that, guys. I think my network switched off. Okay. It's back now. So this is the second high. This is the second high that the market is supposed to take out. But the market take it out the second time. No, market got to this place and reversed. So this is the engineered liquidity. Very, very easy. Assuming market broke this high here before mitigating loss, this would have been the type A model. But since market did not break this high, that simply means this is the type B model. Type B model, market will give us one break of structure and an engineered liquidity, which is this one here. One break of structure with an engineered liquidity, not two breaks. I get it. So assuming you took this trade now, let's see how many RR you would have come out with. Let me see. Sorry. Okay. Let's say you're targeting 103. Put your SL below the last candle, then target your 103, and boom, we are out. Unless you are targeting 104, and boom, we are out too. Is this not easy, guys? It's very, very easy. Very, very, very easy. Just train your eyes to see this kind of things. And if you're kind of person that um build a bias from daily time frame, yes, you can see this model alongside with your bias. So that is it. So the next one will be um the type A. I think I have it on JAR because I took that trade on JAR. If you are not subscribed to this YouTube channel, guys, kindly subscribe. Or if you are not following me on TikTok, if you see this um, post on TikTok, kindly give me a follow. And if you want similar to pass your prop firm or trade your life accounts, kindly hit me up on Telegram. Just check the video description. Check my TikTok page, which is profile, or my YouTube description. You see my username there. Hit me up on Telegram, or if you want to join our mentorship as well, you can still hit me up too. So moving on, this is the type A model, guys. In the type A model, I told you guys that we have how many breakout structures? We have two breakout structures, right? Look at it here. Sorry. All right. Look at it here. So first thing first, make sure all your rules are intact. Liquidity sweep. Though, even though there's no liquidity sweep, that's not a problem. Okay, so far there's an inducement and fair value gap. That's fine. So after liquidity sweep, market give us a break of structure. Now remember, after every break of structure, the first pullback is always an inducement. So after this break of structure, market give us this first pullback. And this first pullback here is the inducement that is resting close to this POI, or that is making this POI valid. This simply means this is the type A model. This is the second break of structure here. Are you seeing it? Let me draw it well. So here we have how many breakup structures? Two. So after you have seen that breakup structure and your inducement, that simply means your trade is valid and you're in line with the trend. Make sure you are in line with the trend, because if you see this kind of model in a downtrend, honestly, the market will take you out. That's just the simple truth. So make sure you are following the trend. Very, very important. Okay, why the reason why most of you see testers using this model is because you are trading against the trend. So always do your best to what trade alongside with the trend. Okay, the trend is your friend. So target the high. I think we targeted the high here. I think I posted this trade in my signal group. Yeah, I guess. Yeah, I posted it. Look at it. How many are I think 1:5 and more. Yeah, 1:5 plus. You can see there, right? So that is it, guys. So this is the type A, while the other one is the type B. I think I still have one more example. Let me check. USD card. USD card. Don't take my word for it, guys. After watching this video, just go to your chat, back test, practice this thing. Oh my god, you guys see, study to show that self-approved. Okay, so that is it. So let me remove all these things. This will be the last example before we end this video, guys. I'm already exhausted. So yeah, don't forget to share to your friends as well. Just share the links to your groups or your friends. So what can we see here? Firstly, our rules must be complete. Break of structure, inducement, and a valid POI. We must make sure that we are in line with the trend. So the first thing here, market gave us a break of structure, right? First break. then give us another break again. So what model is this? Is it the type A or type B? This is the type A model because we have two break of structures here. So where is your other block? You simply mark your other block from here. Okay. So target your normal arrow, which is 1:3. That's what I target. 1:3 is my list. Sometimes I can target 1:5, but 1:3 is my list. Okay. So target your normal arrow and leave the market. The truth is, if you target 1:3, let me see if the read 1:3. Can you see it now? 1:3 is a very perfect entry. Are you seeing it? It touched that steep before it reversed. So let's say for example now you took a trade and you are supposed to like target a higher arrow, but you targeted a lower arrow instead, which is, let me say you targeted 1:3 instead of 1:10. If market after closing at 1:3, if markets later did 1:100, that's none of your business. Just take your little profit and go. Don't complain. You understand? That's it. That's market for you. Market wants to make you feel as if you don't know what you are doing in this life. They want to frustrate you, but prove to them that Ozil have taught you now that you shouldn't be afraid. Take what belongs to you and leave what belongs to Caesar to Caesar. Take your part and leave. Next time you come back to the market again and take another trade. So that's it, guys. So we'll end it here. Thank you all. And make sure you share this video, like, and remember what I said. We have a seminar group and a mentorship academy too. So anyone you're interested in, can hit me up. So peace out, guys.